Welcome to the October 1st, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offer some insight as to how we set up our charts, what time frames and indicators we use. In tonight's video, likely a short one, we're going to go through a few broad market averages and then some sector ETFs, as there isn't very much that's actionable on the long or short side at this point. So let's dive right in. First up is the NASDAQ Composite, which sliced through the 50 MA this week and continues to push lower. Tried to reverse higher in the afternoon, but that didn't last long and fell apart into the close. Looks like an undercut of the 819 low is next up. We'll have to see if the price can undercut there and bounce. If not, likely headed to the 719 low, which would put it right near the 40-week MA, just above 14,000. And if we're to take an ABC correction here, we have wave A 5.6%, go from the top of wave B, project down 5.6. We have a 14,200 area for wave A, for wave C to equal wave A. So that looks like there's quite a bit of support in this 14,200 area, and that looks like that's where the NASDAQ could be headed. The S&P 500 also sliced through the 50 MA this week and is coming into support of the prior low. We'll have to see if that holds, if there's some sort of dip below and then a bounce back above. Although at this point, we'd view any bounce in the S&P or the NASDAQ as a shorting opportunity, as we just think that there's more downside to come. And if we're to take an ABC projection here, wave A is about 5.2%, so 5.2% down. Puts the S&P at around 4230, which is the low of 719 and just above the 40-week MA. So that looks like a big level right there. IWP sliced through the 50 as well. This is the mid-cap Russell Growth. Looks ugly and looks like it's at the very least headed for an undercut of this swing low and likely a test of the 40-week MA. IWM, nothing really to report here, still in a bunch of chop. And FFTY, IBD 50, growth stock ETF, from breakout to test of the 50, pretty ugly. Next up are a few sector-based ETFs. We're not going through all of them, just want to show you a few. SMH, which was holding up, sliced through the 50 MA this week, has yet to touch the 40-week MA during this entire run off the lows of 2020, so likely headed to that area. XLK, technology ETF, sliced through the 50 and continues to push lower. Also looks like it's headed to the 719 swing low, which would put it somewhere around 147. And then from there, whether or not it tests the 40, we'll just have to see. And that's the 40-week MA. If we were to do an ABC type of correction here, that's a 6% sell-off from the high of B. So 6% puts it at also around 147. Healthcare looks really ugly. It's just been in a nasty sell-off since breaking down below the 50. And looks like it's headed to the 200. And XLF, which was showing some relative strength, broke the 50 MA today. We'll have to see if that holds up, or will the price action head back down to the lows of this wide trading range here. And last up is XLE, which is the energy ETF, and energy's been strong the past few weeks. XLE closed above resistance at 50 and it powered higher, and we'll just have to see how XLE holds up over the next week or two, if the price can hold on to the 10-day MA, or will it need to pull back into the 51 area and test this resistance that it should now become support. So in terms of what we like and what we're looking at, Tesla has held up really well, but again, we're nowhere near a market bottom, or it looks like we're not near one. So to get into what's holding up well, it's just something to put on a watch list, not really anything to trade at this point. AFRM still holding up at the 10 MA, which is impressive. But given market conditions, there's just really no reason to hold something with relative strength when odds are that at best it might be able to chop around, or at worst it could just fall apart, 15-20% in a week or two. Other stocks showing strength, Netflix sitting at all-time highs, broke out, cleared the highs of this long-term trading range. Though the timing isn't right on this breakout, but even if the price action pulls back into the 20-day EMA over the next few weeks, this would be something to keep on a watch list for down the road. And oils are looking pretty good. MTDR is one to watch. Just broke out to new highs. We'll see if the 10-day EMA can catch up. OAS, which has pulled back but could be in play on a move through this 2-day high. On the short side, ASAN has a bear flag type look after a sharp sell-off off the highs. Might be good for a 2 to 3 day sell-off. But overall, we're not looking to do much on the short side here unless there's some sort of a bounce, which is why cash is king. Probably best to do very little right now. If you're someone that likes to trade a lot, maybe close your platform. So just a quick recap, we believe the broad market averages are headed lower. If there is some sort of a 2 to 3 day bounce, that's likely going to be shortable. And beyond that, though, it's all just a guess. And we'll be looking for an actual follow-through day in our timing model to generate a buy signal. But until then, we're mostly laying low, sitting in cash. All right, thanks for joining me. Have a great weekend. We'll see you next week.